Happy Hump Day, Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group, and legal, lawful, constitutional, even biblical tender, something that has been money for 5,000 years. And really, the only thing that's been money longer than, a few hundred years. Talking about gold and silver, it is what we do. AllAmericanGold.com is the website. KXXT 1010 here in Phoenix, 1360 KHNC, the roar of the Rockies, up on the mothership in Colorado. Welcome to the podcasters, all you YouTubers and everywhere else. We're just about everywhere you can think of. A quick update, my uncle's funeral, Eric's funeral, will be this Saturday. I will be adding a Zoom link to our website. You'll be able, for those of you that would like to watch the funeral, maybe you're out of town, you're Colorado folk or what have you, or coronavirus, whatever it may be. We'll have that available through Zoom. You'll be able to watch it. Get so many people with cards and letters and emails, and thank you very much. People are, if you want to send flowers, we've had calls about flowers. You can send them right here to the office here in Phoenix, and then we'll get them. As long as they're here by Friday, we'll get them to where they need to be for the funeral. That it will be on Saturday. And again, look for that Zoom feed. We'll have it at allamericangold.com for all of you that would like to watch it. It'll be there for you. Just obviously it'll be a tough week. Been a tough week. Big correction in gold yesterday. And I always laugh because I love it with these guys. They always want to give you this, it's this and it's that. It was a correction. Nothing more. Was it a big bank? And of course it was. Or a big hedge fund. They want the price to be down. Kitco's having a problem this morning. The chart is right, though. However, if you go to our website, we've got the right price, allamericangold.com. Gold is up. And it just depends. For Kitco's purposes, gold's up $35, $1,945. Silver up $1.25 at over $26. It was a wild ride yesterday, and then especially in the aftermarket. So after gold closed, it was a very wild ride. That's why Kitco's up 35. The NYSE in New York, gold's up 10. Same price. But there was a lot of activity in the aftermarkets, and then a lot of activity in the early morning in what we call the Asian trade. Gold went all, but a potential bottom, like kind of, hey, this is going to be like, this is the lowest it's going to go possibly in that 1870 level, of course. Right now, gold's 1945, coming back from that. Gold touched $2,100, so it's still, we lost about, $100, give or take, in the move. Intraday, we lost about $150 intraday from the high to the intraday. Silver, man, little brother, right? I always tell the story, gold and silver are brothers. Gold, responsible brother. Silver, he's a little more, he's the wild child. Silver was down almost $5 an ounce. Percentage-wise, me and Jason were talking about it. One of the biggest, if not the biggest percentage drop intraday, not closing, but intraday that we've seen in silver possibly ever. I just haven't had to go, there may have been a time when silver was, $4 and $5. It may have gone from 5 to 4, in one of those times, but one of the biggest percentage drops we've ever seen. Gold in dollar terms, one of the biggest dollar drops intraday, again, that we've seen. I think there was one higher during the 2011, I believe that we had one day higher, but gold rebounding here very strongly this morning. Silver rebounding as well. And I think this is what we're going to see. We're going to be, somewhere between 1,900 and 2,100 until we get some more news, some more data points. How bad is the economy going to be? How much is the stimulus? Is there going to be stimulus? Right now, the Democrats and the Republicans, I thought for sure that after what Trump did, they'd get something together, at least as of right now. Nobody's talking. Nobody's doing anything. And, of course, yesterday I told you the executive orders, they were nice, but they really didn't have a lot of teeth in it. So it's one of those things that we'll have to wait and see if the Democrats are going to come. Kamala Harris is now the VP. So we know finally who the VP is going to be for the Democrats. I don't know that matters at all. I personally think it was the wrong choice because, number one, I know they wanted a black woman. That was pretty clear. That was kind of, they limited themselves. I think that was a bad idea. She's from California. The Democrats are going to win California. I mean, it doesn't matter what, Trump, that's a state that the Republicans are never going to win. I think they would have been much better off getting somebody that could have helped them win Pennsylvania or Michigan or whatnot. So good news for us Trumpers. That's just my opinion on that pick anyway. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592, Patriot Radio News Hour. The big pullback yesterday. Get right. Listen, volatility is going to be here for a long time. We're going to see, you look at Wall Street right now. Right now, the volatility is all to the upside. And I don't, again, yesterday we kind of told you, hey, the big stocks, and the ones, right? The Facebooks, the Amazons, the Googles, the Teslas of the world, right? They comprise so much of this market now. It's amazing. Apple alone, one stock, is greater than the Russell 2000. We only have about 3,000, give or take, publicly traded, U.S.-owned, if you will, stocks in the whole stock market. That's it. That's what we're down to. I don't even know how many ETFs. There's more ETFs than American-owned stocks. And it's just very, very one of these things. When this is just the new normal. This amount of money creation, the central banks essentially with the accelerator to the floor, the government, even whether it's executive action or the Congress acts, I mean, it's going to be trillions. Here's the thing. Doesn't mean it's over. It's not like, some of these other recessions. This one's different. And it's different because we don't know, what's going to happen. You start thinking about all the things America's been through. We've only been around, listen, we're a younger country. We haven't been around that long in the grand scheme of things. No one's ever done this where we've just shut down economies. I don't know, it's Steinmart today. They got stores everywhere. They're going to close them all. They're done. It's over. And we talked about rents not being paid. Now, this is the first, here we are in August now, so now we're talking about 2 weeks here with no money. Well, you only get the unemployment from the state, and how much longer this is going to continue. And I think this is what needs to happen. You're going to see as the economic data comes out, and all of a sudden the lack of 32 million people getting the extra 600 million, the fact that people can start foreclosing now. Again, the executive order from the president didn't have a lot of teeth in it. It was just kind of, again, it was a made-for-TV, try to force the Democrats. I don't know what the Democrats are doing. I don't get it. I mean, why wouldn't we compromise? Mnuchin, the Treasury Secretary, was out on TV today, very upset, very angry because the Democrats just aren't willing to negotiate, and I think it's going to come to that. Eventually, it's going to come to that. Unfortunately, it's going to hurt the economy. I think the Democrats know that. I really think they're playing politics with 32 million people. I mean, that's all I can think of, because why not take the $400? I mean, it's pretty clear that they're willing to give it and take it, but they're not. And I think they know this is going to have a big effect on the economy. This great I don't know if it's a great recovery, but the recovery that we've had is going to be a little more painful now, and I think that's what they want to have. They're trying to help Biden get elected, and I just think it's a very dangerous game. And why gold here? It's just going to allow you to buy for less. Yesterday I told you don't buy yesterday. Wait a day. Late yesterday afternoon, we got exactly what I was hoping for. The wholesalers finally dropped pricing. Today I've got U.S. $20 liberties, about $75 $20 liberties. These were $2,235, $2,335 at the beginning of the week. $23.35. $21.95 today. Buy on these dips and buy them aggressively. 800-951-0592. U.S. $20 gold pieces, $21.95. And I will tell you, I was glad to try to get it under that $2,200 price point. We haven't been there in a while. I don't know how long we're going to stay there. Again, the Democrats don't seem to want to play ball. Something very interesting happened. We have not seen this a lot. The Treasury market. It was a bad day for bondholders yesterday, and it's continued today. The rates are starting to rise. So remember, we were down near 0.5% on a 10-year note. Today, they're at 6,800 basis points. Now, that's not, it's not huge. It's not like it's at 2, 3, 4%. But as far as a move from 0.5% to 0.68, that's a big move. The thing was the dollar didn't go with it. Matter of fact, the dollar is down this morning again. It was down a little bit yesterday, down again this morning, another 25 basis points. It's at 93.30. 93.30. It's above that 92.80, but not much. We didn't get this huge power move in the dollar that normally you get when rates are rising. So that means something else is happening. We'll have to watch this trend as it plays out. Do we have a problem? As we remember, the Treasury had to jump up the debt auctions, right? We talked about that. We've got to auction off $1 trillion. On top of we've got to roll over. And the quarterly rollovers right now are probably in that $3 trillion range. So think about it, we got to sell $4 trillion of debt just in this quarter. Not to mention, hey, we got stimulus of some sort, maybe, possibly. I mean, it's going to happen, right? I think all of us agree. The stimulus thing is going to happen. The question is, when is it going to happen? I'm kind of already believing, listen, it's going to be at least $2 trillion. All of that needs to be sold. So now are we starting to see the ramifications of what the Chinese have been doing, getting away from the dollar in their cross-border trades? Are we having some issues at the auctions where we're not getting the bids at enough bids at the lower number, right? We're not getting enough bids at 0.5%. All of a sudden, whether it's countries, whether it's other banks, whether it's hedge funds, whether it's your pension fund, they're saying, hey, we want more. You had that downgrade, or well, I should say a credit watch negative from Fitch. Remember, now our AAA rating getting possibly ready to be downgraded by Fitch. I think that happens. Again, because we're going to spend trillions more now. I think that could happen before the end of the year. So it's interesting. Not enough yet to say what it is. But normally when rates rise, the dollar rises. It's not what happened. We've had rates rise, and really when you think about it in percentage terms, it was a big rise. I mean, it was over a 20% rise in treasuries percentage-wise with no move in the dollar. And matter of fact, today it's moving back down again. This is something that we'll have to wait and play out. We'll keep an eye on it. I'll keep you updated on it. If that trend continues, then I think we can say that we've entered into a new phase that we haven't seen yet, which is, hey, the debt now all of a sudden getting a little harder to sell. What's our Fed's answer to that going to be? How high are they going to allow rates to go? We've had mortgages at all-time record lows. That's over. And if that continues to creep up, what are the ramifications of that going to be? We had inflation data out today. This was consumer prices, and of course, a lot of you know it. If you've been out at the grocery store, prices are rising. They were expecting only about a 1% rise in the CPI. Was up 1.6% month over month. So 1 month to the next. This was a July number, so from June to July, up 0.6%. A lot of that, and almost all of that, in the food department. Go into the grocery store, the food price index now up almost 5% over the last year. So think about just food alone. One of the things that we can't do without, right? We've got to buy food. It doesn't matter if the cell phone got cheaper or the camera got cheaper or the laptop got cheaper, right? We don't have to buy those things. We don't have to buy a TV. You got to buy food. Up 5% year over year. Think about it. I just told you a 10-year note's yielding 0.68. Right? We have we got negative yielding bond markets. It can't last forever. Beef, the big jump, right? Up 14% in the last 12 months. And then fish, eggs, poultry, anywhere from 4 to 8% on those categories. Fruits and vegetables up 2.3%. Non-alcoholic beverages, I guess that's your water and your soda, up 5%. Really getting hit at the grocery store, according to the CPI, forced the CPI to be a lot hotter than it needed to be. Another reason why, right, you start looking at these bond yields, doesn't make a lot of sense, but we'll have to just keep watching it. Gold is rising despite that, and really because of that, right? We talk about, can you have inflation and deflation at the same time? I think you can. I really do. I think we're headed for horrible inflation and a lot of things, food being one of them. We may be in a situation where you're deflationary in other things. I look at airplane, right, as an example. You look at the cost of selling a cruise boat, right? How many people want to buy one of these cruise ships from one of these places that, isn't sailing right now? Caterpillar equipment and things of that nature, we could see that go the other way. So it's really going to be very interesting how this is going to play out. And then yesterday we talked about, Wall Street and the firms and how big Apple and Microsoft and Amazon are. I think we have two sides. I think Apple and Amazon both. I could be wrong, but I think both of them are bigger than the entire Russell 2000. But we have a very, very interesting thing happening now as bankruptcy filings, right, are starting to skyrocket today. I just told you Steinmart today. They're just giving up. They're saying, well, it looks like we're just going to close them all. There's a possibility that they may keep a few open, but I don't think there's no buyers. No one wants that stuff. Big companies going bankrupt at a record pace, but that's only part of the story. Small businesses are disappearing by the thousands, and this is something, as this plays out, that you're going to start noticing. Because right now you drive past these places, their signs are still on the door. Right? So you're not sure, hey, are they just closed or are they out of business? Because the signs are still up. Some of the places, there's still stuff inside, right? And the landlords, they haven't been hanging we've taken possession of the building notifications. You're going to start seeing those. It's going to be very interesting as the rest of this year plays out. how many of these places that you just weren't sure, is it pandemic, is it just closed temporarily? The reopenings are going to be far, far less. And these aren't things, right? They don't trade on Wall Street, right? Your local bar doesn't trade on Wall Street. The store that sells the knickknacks and the gifts, they don't trade on Wall Street. The little mom and pop eateries don't trade on Wall Street, right? The bars, right? Your local bars and things, they don't trade on Wall Street. It's going to be very interesting. Right now, you drive by, you don't know. Right? The sign's still there, right? You look in, the tables and chairs are still in there, but are they really open? Right? Or they've already gone out of business, but they're just waiting for these moratoriums. Going to be very interesting. But according to Newsmax, they're looking at the utilities, and they're noticing the power being shut off as one of the things they're looking at. And in small businesses, all-time record highs, according to Newsmax. 800-951-0592. We got two lines open. The U.S. $20 Liberties at $21.95. So just a huge discount. I mean, you think about where we were at the beginning of the week. I mean, that's a $140 difference. You look at gold here. Gold's really down about $140. So it's a great opportunity. 800-951-0592. I just got an email from one of our suppliers. I do have 20 Saints. We haven't run Saints in a while. I do have 20 Saints as well. So I know some of you like the Saints. 20 of those. I'll do those at $21.95 as well. The problem is on the Saints, I only got 20. On the Liberties, we had about 75, but now we got one line open. So things are moving quickly here. Take advantage of this pullback. Again, when you look at the pullback, the dollar didn't go with it. You saw I saw these headlines. Oh, the dollar rallied, dollar didn't rally. The bond market did. But the dollar didn't go with it. And again, this is something you don't normally see. Too early to say a trend, right? We could have that 10-year note come right back in the next few days, and it could be nothing. It could be something, but this is a pullback. We've been talking about it. We needed it. We got it. I liked it. Remember yesterday, I told you yesterday we were about that 1940 level, and I said, don't go yet, because I wanted it to go. I wanted it to get to 19. We did that, plus tax last night. Is it over? I think so. Could we go back to 1900? We could. Absolutely, we could. I think we're going to sit here between this 19 and 2100 and wait for data, wait for news, and just see. Here's the thing. The payroll tax part of it, I don't see that as part of the deal. If that happens, just to give you a perspective, the payroll tax, we collect about $1.2 to $1.3 trillion. So when you look at government tax collection, right, the federal government collects, give or take, $3 trillion. I was going to say $3.3 trillion, but I'm a little worried. This year's probably going to be a little light. But let's just say around $3 trillion, okay, somewhere between 2.9 to, say, 3.5 trillion in taxes. The payroll tax is a third of that number. I mean, it's a big number. So when you talk about, hey, we're going to suspend it or not do it, it's a big number. And again, remember, in Trump's action, it was only a deferment. Right? You'd have to pay it back later. So it was, again, I don't think that's what he wants. I think they're trying to draw the Democrats on board, and I don't know why they're not coming. I don't get it. This is dangerous. You know me, I don't like to spend money. I don't think we should. But again, a lot of this, hey, this was our fault. Why did we close it down? And, you think about it, nobody more than me. Tragedy has struck my family because of this. It has. And I still think we've done the wrong thing. Right? And if one of the things I don't like about the president, we didn't do a very good job in getting prepared for this. The Democrats forced the shutdown. They did. The liberals wanted this to shut down. They got Fauci out there, their head cheerleader. They got that guy from Johns Hopkins and got everything to shut down. We've never shut down before. And the hard part is, how do you restart? Look at the college football now, the Pac-12. Yesterday I said the Pac-10. I guess they did change. The Pac-12 did change to the Pac-12. The Big Ten still the Big Ten. But I guess because somebody else is already the Big 12. So I guess in fairness to the Big Ten. But the Pac-12 says they're not playing. The Big Ten says they're not playing. Obviously, the lower levels, they're not playing. Right now it's the ACC and the SEC and waiting on the Big 12. I don't know what happens. I don't know what happens. When we talk about what, college football not being played, and they said, hey, we're not like the pros. The pros got everybody in a bubble and this and that and the other, and the revenues that are lost there, and you think about how much money is at stake and all of these things, it just makes it very difficult for me. They canceled all fall. All sports for the end of the year. So that includes the start of the basketball season and all these other things. The economy, this isn't a quick fix. I think we need more money. If you're going to keep it closed, we're going to need more money. I mean, and you look at, we're going to have a debt of $30 trillion at the end of this year. By the end of next year, what's that number going to be? What are we going to be? 34, 35, 36? I mean, these things, it is really one of these things. When you see pullbacks in the market like this is when you buy. They gave you another chance. Right? They gave you another chance to get in. I don't think you're going to, below 2,000. You're not going to get the below $2,000 price. You're not getting that chance. But at least you're getting a chance today below 2,200. Take advantage of it. The spending doesn't stop with this next stimulus bill. It doesn't. It's not enough. Especially when you have like the Pac-12 and the Big Ten saying, listen, we're canceling all sports, all school. My son, I got one son in college. They've already said, listen, the whole semester is closed. It's all online. Not for a month. Not for 6 weeks. For the rest of the year. And now you're seeing all these other, we're done for the rest of the year. How many companies, I know Google's already said, listen, no, none of our people are traveling until at least the summer of 2021. Right? And we hear all this stuff about vaccines and this and that. And I'm going to tell you right now, how many people are really going to take it? Are you going to take a rushed vaccine? I don't think so. And is there really a vaccine? I say, can you really take a shot and then say, hey, you're never going to get it again? I don't think that's what we're talking about. I don't know. I'm not a doctor. I'm not. But all as I know is there's a reason why. There's a reason why vaccines take years and really a decade. Right? You think about, hey, you're going to try to inoculate the entire country. Well, you better be right. All the checks and balances better be in place. Right? Instead, we're using warp speed. No, you don't use warp speed. That's just you don't do that. It's too dangerous. I don't know, and I'm seeing things all over. A third of the country won't take it. I think it's more than that. Again, there's no easy fix here outside of it. I don't think we're going to do it. I don't think they're going to relent and say, just open it back up. Let's do our best to take care of anybody that gets sick and move ahead. It just isn't happening. The school systems, right? The vast majority of the schools, online only. The colleges now, the sports, outside of professional sports, everything else has been canceled for the rest of the year. Which indicates to me more money's got to be spent, and for how long, that's the thing we don't know. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. We've got 15 Saints remaining at $21.95. 40 plus 20 Liberties at $21.95. buy that pullback. We waited yesterday. It was a good wait because we were at $22.25 yesterday, able to do $30 better today, even though gold's up pretty big. Matter of fact, gold's at the highs of the day right now, up $15 to $45, depending on where you look, closing in now at $19.50. Here comes silver. Silver roaring here, $26.25 and climbing. So think about silver. $4+ pullback yesterday, coming back now today again. But that's what we're going to have. We're going to see huge volatility. Remember, we keep talking about there's going to be $100, $200, $300, $400, and $500 up days. There's going to be $100 down days and $200 down days. And there's going to be silver. There's going to be $3 and $4 and $5 moves. It's just going to happen. I mean, because, this is the economy that we live in. When you have, gold and silver on these tears, we're going to get these pullbacks. They're going to be big. It appears like they're going to be shallow, though. In other words, it's not going to last all that long. We'll have to wait and see how long this one lasts. Already, I'm a little surprised at how strong this comeback really is. A number of states already this morning now, and this may have something to do with it, saying they can't do the executive order for the $400. They don't have the money. Remember, because Trump wants the states to kick in $100. Already, a lot of the states, I think we're up to 15 or 16 states already got to borrow money from the federal government for unemployment claims, right? Because they can't even afford the amount they've got to pay, right? Forget any additional amount. We can't even pay them the $200, the $300, the $400 we've got to. Now the states are saying there's no way we can pay an extra $100 a week, that we don't have the money. And now a number of states saying they just aren't going to be able to do it. And again, we need them to come together. What's the holdup? I don't know. You either got to put everyone back to work or send out checks. And the other thing, too, people were questioning the gig guys. Doesn't look like that's in there. And I'm just from the comments from the states, you got to remember, we have just as many gig unemployeds as we do regular unemployeds. The total is 32 million. Well, it's about 16 million apiece. So a lot of questions still to be answered. I don't see how this all plays out. This is going to cause huge slowdown in the economy that we can't afford. And again, we're going to see the lines at the food banks are already back. This is going to be week 2 now. Obviously, the Democrats and the Republicans, still no agreement. The fastest way to get money to people is Congress. If you're not using Congress, forget about it. It's going to be months before they see it. It's just how the legislation works. This is why I'm telling you, I don't think this pullback, it's a pullback, it's a buying opportunity. That's all it is. I don't think this is going to be prolonged. I think we'll be, like I said, that 1,900 to 2,100, and then the data is going to point us to the next leg higher, because everything I see says more debt, more spending, more bailouts. Still no word. Again, we're going to start seeing all of these signs. Start looking for signs. As you're walking down the street, are there signs of landlords seizing possessions of buildings? And see if that's coming up yet. It's going to be very, very interesting to see. Same thing with the people, the renters, and the housing. Already, I'm hearing reports now that older millennials and younger millennials, especially the younger millennials, and I guess younger millennials would be, 25 to 35? 25 to 30, 35, moving back home again. So we're starting to see now. We'll wait. Too early to say it's a trend, but it appears that is starting to happen, that some of the landlords are starting to take possession of the people that weren't paying the rents, especially if you lost the $600, you're probably not going to pay, right? What do? You go back to live with mom and dad. 800-951-0592. CNBC saying no sign of stimulus in sight, saying that Nancy Pelosi says the White House and them are miles apart. So again, how can we be miles apart? Right? I mean, the White House, they've all but said, listen, we'll just meet you in the middle. And the Democrats are saying no deal. Also, in other news, this is something that we haven't talked about. Canada is imposing $2.7 billion of tariffs on U.S. goods after Donald Trump, they said, reignited the trade war. So here you go. Canada's decision as Trump put 10% duties on Canada's trading partners when it came to aluminum. Canada's responding that they will impose a dollar-for-dollar countermeasure as needed. So Canada yesterday slapped tariffs on $2.7 billion worth of U.S. goods. I didn't even know that happened. But again, all these other things behind the curtain. You know, we're so focused on coronavirus. We're so focused on stimulus. We're so focused on the handful of stocks dominating Wall Street. You lose focus on what the rest of the world is doing. And right now, not a lot of it is good news for us, right? Obviously, China having a lot of success getting away from dollars, had a lot of success in blowing off the trade deal, right, that they agreed to, nowhere close to honoring those commitments. The TikTok thing still going on, and I don't know how that's going to end. And now apparently we've upset the Canadians. So 800-951-0592, U.S. $20 gold pieces at $21.95. Take advantage of the pullbacks when they arise. Patriot Radio News Hour, final segment coming up. Hey, this just in. Final segment. 800-951-0592. Get on the horn. So listen to this. Back in January, a team of researchers for the Federal Reserve, so the Federal Reserve's own research team, released a study to the Fed showing that the largest banks operating here in the United States have been gaming their stress test results by intentionally dropping their exposure to over-the-counter derivatives. In other words, they're trying to misrepresent how much exposure to these bad debts they really have. And the Federal Reserve's own researchers proved it. The report, by the way, how do U.S. global systematically important banks lower their capital surcharges? And they said, according to the results, which have now been researched and proven to be correct, they said in the case of J.P. Morgan alone, it dropped its total derivative exposure from $55 trillion to $46.9 trillion. You know, no big deal. Hey, no big deal amongst friends. You know, it's okay. Don't worry. We only lied about $8 trillion of exposure. Right, and you know, you start doing that. If they're lying about $8 trillion, and Bank of America's lying about $8 trillion, and Citigroup's lying about $8 trillion, and Wells Fargo's lying. Who knows about how much Wells Fargo's lying about? Right? You start doing the math. How many trillions is it? And then think about the math of it. $8 trillion on $55 trillion. That's like 14.5%. Yeah, it's just a little white lie. It's fine. The Federal Reserve seems to be accepting of this behavior. From all of the banks, the Federal Reserve announced their new capital requirements for the banks, and they said that they are now debating whether or not they need to go back and reevaluate how sound these systematically important banks truly are. It's going to be very interesting to see. So they knew about it as early as January. didn't let anybody know the document got leaked, and now all of a sudden the central bank has got a decision on its mind to make. This is going to be another one of these, and this is the problem with what's going to happen. We don't know what's coming out next. I mean, we don't. Right here we are. You know, they created these stress tests to try to convince the American public, yeah, don't worry. All these banks are great. They're super sound. And look, we do these stress tests, and they all pass amazingly. I can guarantee you right now there's not a single bank passing a stress test when 83% of eateries can't pay their rent. Right? There's not a single bank paying their stress test when Yelp says 80,000 small businesses have gone under. There's no way they're passing their stress test when 33% of people aren't paying their mortgage or their rent. It's just not possible. Well, unless you lie about the numbers.